What's good and welcome back to Investing with Jax. If you get any value out of this video, please smash that like button, subscribe, and turn on notifications if you're new. So we're going to talk about High Tide first, ticker symbol HITIF. I've already done a deeper dive on this video. If you want to check that out, link will be in the description. So an article was released on March 4th, and analysts expect High Tide to break even soon. Great sign for all of us holding High Tide. So according to two Canadian pharmaceutical analysts, High Tide is bordering on break even. They anticipate the company to incur a final loss in 2020 before generating positive profits of Canadian 7.9 million in 2021. So the company is predicted to break even approximately a year from now or less. And they calculated to break even under 12 months, they would need an average annual growth rate of 114%. Now, we recently went over the financials of this company, which was extremely positive. They had a revenue increase of 118% in the fourth quarter alone and 166% for the year end October 30th, 2020. So to think that the company won't grow by 114% in the next 12 months or less, I think it's quite possible. So this is a good sign for all of us holding High Tide. One thing to take into account is that their debt to equity ratio is quite high. It's over 2x, and generally the rule of thumb is that the debt ratio shouldn't exceed 40%. But they are a growing company. They are expanding with these brands. So personally, I'm not too worried about that, but this is not financial advice. So they're currently sitting at 57 cents with this market pullback. Of course, most of the market is red, which is a little bit hard to look at, but if you're an intelligent investor, you know this is an incredible time to buy, and you know you shouldn't be worried as things will start to look green very shortly. I mean, hopefully very shortly. So if we're going to dollar cost average into this play, which is of course so important, especially with these market pullbacks, we're going to do 300 shares at the current price, 300 shares if it drops down to 50 cents, and 300 shares if it ever drops down to 40 cents. You may never see that, but you want to be ready for these, for the volatility and for these pullbacks. So next we have XpresSPA Group, ticker symbol XSPA. They recently signed a contract with the Port of Seattle for an XpresCheck C19 pop-up testing facility at Seattle-Tacoma International Airport. So this company continues to expand into more airports in the US with these C19 facilities, which are so important moving forward with travel. So let's talk a little bit about it. So this is the company's first testing facility on the West Coast, and it's expected to be fully operational by mid-March. It will host 8 separate testing rooms with an anticipated capacity to administer over 500 tests per day. C19 testing options will include the rapid test as well as the PCR test. So anyone who is going on vacation, anyone who is traveling out of the country for business, in many cases will need a C19 test before getting on the plane. So this is making it extremely convenient, and this is a very good sign for this company moving forward. So the CEO, his name is Doug Satzman. This is what he had to say. We are excited to be launching XpresCheck at Seattle Airport as it marks our first C19 testing facility on the West Coast. Additionally, we are proud to be a trusted partner of the Hawaiian Airlines and the state of Hawaii, as several direct flights to Hawaii originate out of Seattle. This helps to make pre-travel testing accessible and seamless for passengers taking a long-awaited Hawaii vacation. So they are also doing this at many other airports throughout the US. So in total, they are looking to support C19 testing in 46 locations across 23 US airports. Now, many of these are already open if you go to their website and do your own due diligence, and quite a few are opening in mid-March. So that is an upcoming catalyst for this company. And if we look at the institutional ownership, they have been loading up in the last few days. We have Hudson's Bay Company, who on March 4th bought 200,000 shares, and we have Vanguard on March 1st who bought 1,969,000 shares. So they are loading up. So if we're going to dollar cost average into this play, and we'll use 90 shares as an example, 30 shares in between $1.40 and the current price, 30 shares in between $1.20 and $1.30, and 30 shares if it drops down to $1.50. 15. Now I would consider locking in your profits in between the $3 to $4 range. Once this testing is no longer needed, which is not going to be anytime soon, the share price is most likely going to go down. So personally, if I see it in between the $3 to $4 range, that is at least a 2x on your investment, I'm going to get out of that play. That's just my personal opinion, not financial advice. You do you, but just be smart about it, okay? All right, guys, I hope you guys enjoyed the video. If you did, drop that like button. Drop a like on the like. I'm tired today. Smash the like button, subscribe, and turn on notifications if you're new. And I'll see you in the next video. Wow, okay, just end it.